What if I told you it's entirely possible to buy a second property with no deposit? If you already own a property, you can tap into its equity to help you get that next home loan. Hey everyone, Kim Clutch from Geotax, here for another video designed to help you become a better property investor. Once you've gotten your foot in the property door, it's hard not to think about buying your second property. But buying your first property was already a massive feat. So don't be surprised if the thought of buying another property overwhelms you, especially if it involves saving for a deposit. But there's something that you may not have considered before, and that's using the equity in your existing home to purchase your second property. It's a pretty powerful tool, so I'm going to run you through exactly what this process entails. Before we get started though, we want to be clear that this video is for informational purposes. In no way should you interpret this as financial advice. We always recommend working with a qualified financial advisor or tax agent to give you the best advice for your situation. Okay, so you may be wondering what equity actually is. Well, in simple terms, it's the difference between the value of your property and the amount you owe on the home loan. So, for example, if your property is valued at $830,000 and has an outstanding mortgage balance of $220,000, then the equity in that property is the difference between those two amounts. In this case, the equity would be $610,000. Okay, so now we've worked out how to calculate equity. Now, let's see how you can access it. In most cases, the easiest way to purchase your second property using equity is to use the equity as a deposit for the second loan. In other words, the equity from your home or investment property can be used as a deposit on a second property, while your current property becomes security on the new debt, allowing you to buy a second property with no cash deposit. It's worth noting though that since the bank is lending you the money against the value of your home, they won't lend you the full amount. Lenders will typically allow you to borrow up to 80% of the equity in your property, minus outstanding debt, to purchase a second property. So although in the example above, the equity was $610,000, you won't necessarily be able to access all of that to buy your next property. If you're feeling confused, don't worry. I'm going to show you another example to illustrate how it all works. Kelly bought a property 10 years ago with $500,000. She took out a home loan with $400,000 to buy the property. Currently, she's paid off $150,000 of the home loan's principal, leaving her with an outstanding loan balance of $250,000. After having the property revalued, it's now worth $550,000. So her equity in the house is $300,000. Kelly is ready to access some of the equity to use as a deposit for a second property. The bank will only allow her to borrow 80% against the new valuation, which is $440,000. If you take away her outstanding debt of $250,000, Kelly has $190,000 of available equity to use towards her second purchase. Sounds simple enough, right? But there are obviously a few qualifying factors you need to consider. If you use the equity as a deposit on a second property, you will be paying off 2 home loans instead of 1. So it's important to ensure your cash flow will be able to handle this. Refinancing your current property to release the equity also means you're increasing the amount of debt on your current home loan. So you will be paying it off for longer and paying more in interest over the life of the loan. Having said that though, if you keep using this approach and adding even more properties to your investment portfolio, provided that there's sustained capital growth, it's likely that there will be a compounding effect. Every time the property market rises, your property wealth and usable equity will rise too. But remember, The property market can be volatile. It's a good idea to speak to a financial expert and take your individual circumstances into consideration. Equity is one of the most powerful tools property investors have at their disposal. So I hope this gives you a better idea of how to use it for your next property purchase. That's it from me. If you know a friend, colleague, or family member who needs to hear this, please make sure you share this video with them. I'm Kim Quach from Geotax. See you next time.